So while YouTube and TikTok are full of doom and gloom around the crypto right now, one of the world's biggest banks has just come out and said something very, very interesting. Standard Chartered believes Bitcoin may have already hit its cycle bottom at around 59,000 US dollars. Not only that, the head of digital asset research is still standing by their $100,000 Bitcoin target for the end of 2026, despite everything that's been happening in the market. Now, before you roll your eyes and say, oh my God, here we go, another Moon Boy prediction, I actually think this opinion carries a lot more weight than most people realize. Because this isn't just coming from some anonymous crypto influencer on X. This is coming from one of the largest international banks in the world. And today I want to explain exactly what they're saying, why I think it matters, and why I think many retail investors could be making the same mistakes they've made in every single previous market cycle.
I am not a financial advisor. This video is based solely on my opinion on what I'm personally doing in this market. I also want to let you know that some of the links below and in the descriptions are affiliate links, meaning I may get a commission, but it will be at no extra cost to you. Please remember that under no circumstances will I ever contact you and ask you for investments. You can confirm all of my real social media handles in the description and also at milkshakematty.com. This content is for educational and entertainment only, and I'm not a financial advisor.
Before we jump in, if you're completely new to trading bots and automations, we've put together a totally free TRADEBOT Pro course. The course takes you from absolute beginner to having your own trading bot running in under 30 minutes. You can even trial the entire thing completely free for 14 days. No credit card required, no obligation, just follow the course and see if automation trading is something that suits you. While the rest of social media is panicking every time the market dips, many of our members are simply letting the automation do the heavy lifting. There's a link in the description, or head over to cryptowolfpack.co.uk and click on the free course. Right, now let's talk about Standard Chartered, because the man making this call is Geoffrey Kendrick. He heads up the digital asset research at Standard Chartered. And according to him, Bitcoin likely reached its cycle low at around that 59,000 US dollar mark last week. He believes that when investors look back at this period in a few years' time, they'll view those levels as a significant buy-in opportunity. What's even more interesting is he hasn't abandoned his bullish outlook. Despite Bitcoin falling more than 50% from its highs, he's still maintaining a target of around 100,000 US dollars. Now, that's important because it's easy to be bullish when prices are rising. It's much harder to remain bullish when sentiment is awful and everybody is calling for lower prices. And let's be honest, at the moment, there are plenty of people calling for lower prices online. Every time the market drops, social media fills up with predictions that Bitcoin is going to 40,000 US dollars. 30,000 US dollars. I've even seen 20,000 US dollars. The targets just keep getting lower and lower the more depressed the market feels. And the fear, it keeps growing. And that's exactly why comments like this are getting attention, because they are running completely against the current online narrative. One of the biggest mistakes investors make is assuming that bottoms happen when everybody feels good again. They do not. In fact, the exact opposite is usually true. The best buying opportunities in history have almost always appeared when investors felt sick to their stomachs, when fear is at its absolute highest, and when the media is overwhelmingly negative. And also when social media is full of predictions that everything is going lower, lower, lower. And that's exactly what creates market bottoms. Because eventually all the sellers run out of things to sell. Think about it logically, because if somebody wanted to sell Bitcoin because they were scared, they've probably already sold. If somebody wanted to sell because they lost confidence, they've probably already sold. And if somebody wanted to sell because they needed liquidity, they've probably already sold. At some point, the market simply runs out of sellers, and that's when prices begin recovering. Not because the news suddenly improves, but because there are no longer enough sellers to keep pushing the price down. And that's why market bottoms are so difficult to identify. The environment always feels terrible at the time. Nobody rings a bell and announces that the bottom is in. You only know for certain after the market has already moved back up. And that's why so many people miss the biggest opportunities. They're waiting for confirmation. But by the time confirmation arrives, much of the move has already happened. But here's the part that really caught my attention. It's not necessarily the price target. It's why he's making the call. One thing I always try to do is separate noise from the actual signal. And there's a huge difference between the trust me bro approach and a professional research team looking at institutional flows. What Standard Chartered are essentially saying is that much of the forced selling may have already happened. The panic, the liquidations, the fear, the capitulation, markets often bottom not when the news becomes good, but when the selling pressure becomes exhausted. And that's a very important distinction because most retail investors wait for positive news before they buy. The professionals often buy before the positive news even arrives. The headlines don't ring a bell and say, "Congratulations, everybody, it's now safe to buy again." That's not how markets work. By the time the headlines become positive, institutions are often already positioned. Now, here's where I think Geoffrey Kendrick's comments become particularly interesting because retail investors and institutions often look at markets very differently. Retail investors tend to focus on price. Institutions tend to focus on positioning. And retail investors ask this, is Bitcoin going up? And institutions ask, who is buying and who is selling? Those are very different questions because price only tells you what has happened. Positioning tells you what might happen next. If institutional investors see that the most weak hands have already exited the market, that becomes extremely interesting because markets move based on marginal buyers and marginal sellers. It doesn't take millions of people buying. It only takes more buyers than sellers. And once that selling pressure dries up, markets can move surprisingly quickly. This is why major institutions spend so much time studying flows, who is accumulating, who is distributing, who is panic selling, who is buying quietly. These are often the questions that matter the most. Let's take a quick trip through history because back in 2018, Bitcoin collapsed by more than 80%. Most people thought crypto was finished. The media declared the bubble had burst. Many projects disappeared completely. Yet that period eventually became one of the greatest buying opportunities in crypto history. Then we had 2020, global markets were crashing. COVID, uncertainty was everywhere. People were predicting economic disaster. Bitcoin briefly traded below 4,000 US dollars. Yet within 18 months, it had risen back to over 69,000 US dollars. Then came 2022 with the FTX collapse, Luna collapse, Celsius collapse, and Three Arrows Capital collapsed. Every week seemed to bring another disaster. Again, people declared crypto as dead. And yet here we are today. The point isn't that prices always go up. The point is that maximum pessimism often appears very close to major turning points. That's why I think it's dangerous when everybody starts agreeing that prices can only go lower. Markets rarely reward when everybody thinks the same thing. In fact, if everybody already agrees on something, the market has often priced that belief in already. The one thing I've learned over the years is that human emotions never change. Technology changes, regulations changes, market changes, but people don't. At market tops, we become greedy. At market's bottom, we become fearful. That's why indicators such as the Fear and Greed Index exist, not because they're perfect, but because they give us a snapshot of investor psychology. When fear becomes extreme, historically, that's often when the best long-term opportunities begin appearing. Again, that doesn't mean the market immediately rockets higher. Sometimes bottoms take weeks or months, but historically speaking, buying during extreme fear has generally worked out far better than if you're going to be buying extreme greed. Warren Buffett famously said, "Be fearful when others are greedy, and greedy when others are fearful." Whether you agree with Buffett or not, the principle has stood the test of time. If you've watched me for any length of time or you're inside my community, you'll know the Fear and Greed Index is something I check every single day. Right now, we are currently in extreme fear. I'm on daily accumulation of XRP, Ethereum, and Bitcoin. I'm also thinking about adding Solana to that list if the extreme fear continues much longer, because this has been a long stint of extreme fear. But trust me, it will not last forever. Now, let's bring this back to XRP, because I know many of you watching this video are XRP holders. If Bitcoin has genuinely established a major bottom, history suggests the benefits don't stop with Bitcoin. Typically, the market recovers in stages. First, Bitcoin stabilizes, then confidence begins returning, then capital starts rotating, then altcoins begin attracting attention again. Then eventually, you get periods where XRP, XLM, HBAR, and other utility-focused projects start getting the momentum in the spotlight. Now, before the comment section explodes, no, I'm not saying XRP is guaranteed to go up tomorrow. That's not what I'm saying. What I'm saying is that if institutions are correct and Bitcoin has already found the floor, the conversation starts changing. Instead of asking, how much lower can we go? People should begin asking, what happens if we're wrong and the recovery has already started? That's a very different mindset. And often, in my opinion, can be a very profitable one. Honestly, I think the most important thing isn't whether Geoffrey Kendrick turns out to be exactly right. The important thing is that serious institutions are beginning to publicly discuss the possibility that the bottom is already behind us. And that's a significant shift in tone. Remember, markets don't move because everybody agrees. Markets move because expectations change. And when expectations are overwhelmingly negative, it doesn't take much positive news to surprise people. If everyone expects disaster and disaster doesn't arrive, that's often enough to move the market higher. So let's bring this all together because Geoffrey Kendrick from Standard Chartered believes Bitcoin likely found its cycle low at around 59,000 US dollars. He continued to maintain a bullish outlook despite the correction. And while nobody knows for certain whether he's right, I think the call deserves attention. Not because he's guaranteed to be correct, but because institutional research teams don't make these statements lightly. They have access to information, flows, and data that most retail investors never see. Personally, I find it fascinating that while social media is full of doom and gloom, some of the largest financial institutions in the world are starting to talk about opportunity. That doesn't mean the market can't go lower. It absolutely can. But it does remind us of an important lesson. The best opportunities rarely feel comfortable at the time. They usually feel scary. They usually feel uncertain. And they usually arrive when most people aren't looking for them. Let me know in the comments, do you think Bitcoin's 59,000 US dollar low was the bottom? Or do you still think we've got more pain ahead? I'd genuinely love to hear your thoughts. And before you go, if you enjoy discussions like this and want deeper conversations around Bitcoin, XRP, regulation, adoption, trading, market psychology, and everything happening in the crypto space, make sure you check out the UK Crypto Podcast. Every week, myself and Paula Talks Crypto, we sit down and discuss the biggest stories in crypto. We interview industry leaders and break down what's really happening behind the headlines. We've had everybody from CEOs to founders to former executives from some of the biggest companies in the world. In fact, if you enjoyed today's discussion, you'd probably love the podcast. I'll put the full UK Crypto Podcast playlist at the end of the screen, somewhere up here above my head. So as soon as this video finishes, you can click straight through and jump into the next episode of the podcast. Thank you for watching. Don't forget to like and subscribe. And as always, the strength of the wolf is in the pack.